Welcome to the One Beer Markets Update. I'm Phil Franz-Warkentin, daily editor with Glacier Farm Media and the Western Producer Markets Desk. I'm here today with Jerry Klassen, market analyst and commodity futures trader with Resilient Capital. Jerry has land in Manitoba and Saskatchewan that he rents out, and his family farm and feedlot is in southern Alberta. Jerry has over 25 years of commodity trading futures experience and is also past chairman of the Canadian Grain and Oilseed Exporters Association. So I'm pleased to be here with you, Jerry. I know these are busy times down on the farm, so let's dive in. I know one thing on everyone's mind, feeder cattle prices are at historical highs. Why is that, and is that sustainable?
Yeah, that's we've been seeing the cattle market, trend higher through the summer, but we've had extremely strong beef demand, over the past 3 months. We're now going into a period where beef demand tends to soften. During September and October, those are 2 months of seasonal low beef demand. So what we find is that feedlots have bid up the price of feeder cattle, and so the margins are going to start to come under pressure, more specifically in the deferred months for January, February, March, and April of next year. Feeder cattle prices are high enough so that those margins are actually in negative territory. So the feeder cattle market has likely run its course for the time being. We're not expecting, significant upside from here on in. We'll probably see a little bit of a softer tone as more numbers come on the market in October and November.
So we've got feeder cattle coming off a bit, barley markets, feed grains in general. They're at some of their lowest levels of the past year. Seems like a bit of a disconnect with the cattle sector. What's going on in the feed market?
Well, right now we have a period where we're just at the tail end of the barley harvest. So we see a lot of farmers selling coming on stream. Farmers tend to bin what they can, and then they don't want to store barley on the ground, so that kind of floods the cash market. So what we've seen now is that selling comes on a time when feedlot inventories are at a seasonal low. And so feedlot inventories that are a seasonal low, we still have seasonal high period of farmers selling. That's put the barley market at 52-week lows here. So we're probably putting in the lows for barley, and we're starting to see some strength in the deferred positions. Feedlots are trying to buy up for now, also for the next, should I say, their next round of feeding, so they can lock in some margins. And so we're probably going to see barley prices percolate higher, starting in October, November, and then through winter, we see feedlot inventories reach seasonal highs, which will result in higher prices.
Okay. And looking elsewhere at the spring wheat in general, that harvest is just coming off as well. What are you seeing on spring wheat looking farther ahead?
Well, when we look at spring wheat, it looks like, we're finishing up the harvest similar to barley. We've had, extremely large farmer deliveries into the Canadian system. That's put some pressure on the basis levels. But what we're seeing now, when we combine US and Canadian spring wheat volumes, production is actually down from last year. So it's kind of the opposite of the winter wheats in the northern hemisphere. And so we're probably going to see the wheat market start to percolate higher or trend higher in October and November as well. And then once we get into that Australian and Argentine harvest, then that'll probably be a temporary peak and the market will start to soften again. So we have a couple months here where we're expecting some stronger values on the wheat, but we're not going to get into a runaway bull market. It's just going to be a bit of a seasonal rally.
Are you seeing anything on protein spreads this year with the Canadian spring wheat versus the wider world markets?
The protein spreads haven't started to widen yet. We're probably going to see that later in winter. But right now, we've just come off the US harvest. We're finishing up the Canadian harvest. And so I think the trade is still getting a better handle on protein levels. But definitely we're seeing, I could say that we're probably a 0.5% lower in Saskatchewan and Manitoba from the early results that I've received. And so that should be supportive for protein premiums later on. Once you have 13 and a half, that's kind of the gauge. After that, you don't really get rewarded for
Yeah.
it as much.
All right. Well, thank you, Jerry. And thanks for joining us for this One Beer Markets update from the Western Producer Markets Desk. If you're watching this on YouTube, you can also find the content at the Western Producer Markets Desk at Producer Markets Desk. So moving forward, thanks again for joining us. Moving forward, you can find the content at the Producer Markets Desk for all your Western Producer Markets content. Thanks again, and thanks, Jerry, for joining us.